Well, thank you for attending Building and Protecting Your Business Worth in this broadcast. Today, I want to share with you um, what's happening in the estate planning area for many families, many people. With the one big, beautiful bill now passed and out there, there's so many planning techniques to save taxes, and also some opportunities to avoid any future taxes in the future. And I use the word penciled in law because who the heck knows in 5, 10 years if it's going to change. So I'm advocating to some people that they utilize some of these benefits and strategies so that they never have to worry about the taxation of their estate. So today I want to share with you a recording I made, and you may have questions. And what I'd like you to do is listen to the video, and then if you have questions, send to me the questions you have. I'll make sure I get back to you and they are answered. And you'll learn a lot today about the different way of looking at planning now. At one time, planning was all about saving estate taxes and all that stuff. That's not to say some people in about 8 different states have estate inheritance or estate taxes in those states. You still have to plan for that, but you have on the federal level a lot of leeway. Basically, you've got $15 million indexed every year per person. So that's $30 million of exempt property. Plus you have gift tax of $19 million per person every year. So we have a lot of leeway. Anyway, sit, enjoy, listen to the video. It's not that long. It's about 18 minutes long. And again, send to me any questions you have. I'd be more than happy to answer them for you. So, thank you for attending Building and Protecting Your Business Worth. I'm Tom Perrone, and today we want to talk about the big, beautiful bill, how it impacts estate planning now. And keep in mind now, with the exemptions being 15 million and up and indexed, and a couple would be about 30 million, the emphasis on estate taxes has changed because most of the families will not be taxed on the estate level. So we're going to talk about what other areas should we be uh, actually thinking about in planning. So one of the other areas that we would want to do is really pre-planning planning, if that makes any sense. So for an example, you want to define your roadmap, and that is what I call where you are. And we have an aid that'll help you define exactly where you are and then where you want to be and compare where you were in your last planning procedure, where were you going versus where now you want to go. And this will help you to relate to the differences in the planning. We want to talk about the core areas of planning: inheritance, protecting the beneficiaries, avoiding taxes if we can, uh, minimizing taxes if we can, and creating liquidity when needed. And we want to integrate that planning to your personal values, your family makeup, the strategies that you might be considering using, and implement it in that fashion. Values where they don't want their children to receive assets too early because all of a sudden their work ethic changes because they have the money. So they might put trusts in that prevent the distribution of those assets at a later time and protect them from the work value and their own values in life. But the money is there for the future. So again, those are things that we talk about, and that's the human side of planning. The other part of it is wealth preservation. You've built up money, assets, and you want to preserve them for the family. You want to make sure your spouse is financially set upon your death, vice versa. And you also want to find out what roles do trusts have in your planning. And when I say trust, I mean revocable trusts and irrevocable trusts. The difference being one can be revoked, the other one is once it's set in motion, it is unchangeable. And you want to know how they benefit you. And that's all part of the estate planning process that we call discovery, where we find out where you are, where you want to be, and that's called a discovery. And we bring out all of those things that are happening today and the direction you could go. And if you do go that way, what are some of the things that you should be doing? So, one of the things that has basically also changed is a lot of the wealthier people who will not be provided for in a long-term care facility through Medicaid, they would not qualify, are going to pay out of their pocket. Now, in the Northeast, I could tell you it costs about $200,000, somewhere in that area, for long-term confinement, which means you probably have to have about $250 once you get through paying the taxes on that money to provide the $200,000. So a focus would be on long-term care facility cost, but on top of that, you have to realize not only do you have that as a cost, as a liability, but you also have the cost of taking care of the community spouse, your spouse. So if you were to need long-term confinement, money's going to come out of the estate to pay that. Is it going to take away from the standard of living that has allowed your family to live? So those are things to look at. By using trust and gifting, however, we can shift assets to utilize what I call other people's money, meaning the insurance company, and leverage that. So we put a smaller amount into trust to provide a much larger amount to pay for these costs. And the big cost is long-term confinement, which has probably replaced estate taxes for most people. So you'll notice down here I use the word penciled in because now this law of exemptions, it is law. And to increase this or lower it in the future would actually be take a new law to do that, which would be hard. But we do pencil it in because we don't know the party that's in power who wants to tax us. If they're the majority and if they have the capability of changing the law. So we want to adapt to the new changes. We want to be proactive. Use it. There's so many good tax strategies and laws that have been passed under the one big beautiful bill that people should learn about, especially business owners, because they're missing opportunities that are in this bill. And one of them, obviously, is the ability to use gifts and trust to help pay for a liability called long-term care. So I do talk about long-term care a lot here because the big problem is a lot of the older long-term care policies that were bought many years ago and were inexpensive then have skyrocketed in premium, and a lot of people have dropped it because they're paying $10,000, $15,000, $20,000 a year, and it's only going up. So I know there's a lot of exposure in that area. But however, insurance companies have been innovative in coming out with new plans that sit on life insurance plans that are not charging the client and can be used for long-term care. And through that, we could use a couple of different techniques to help pay for that through using gifts and more protection through what we call spousal lifetime access trust. Only a couple of downsides on this that could be remedied. Um, so we want to balance what we're doing with our assets and, and utilize the trust and the exemptions. In our planning, we've really shortened the process. A lot of people didn't do estate planning because they just didn't want to go through the process of doing it. And we've shortened that. We could pretty much get we can get most clients within a month a discovery report that actually tells them where they are, where they need to be, and the changes they need to be. Once they've defined that, which gives you clarity and simplicity in your estate planning, you can start implementing. So within a couple of months, you could have a very good estate plan implemented, all set to go. And of course, when we talk about implementation, we talk about having a checklist of all the things that we need. We need the strategies for everybody involved in the family. And then we need to find a timetable to have tangible outcomes by implementing. And that once you do that, you basically have really put together a nice plan that will serve you very, very well. And now it's just a matter of fine tuning. With our clients, we send out an update every year as to what has changed and what's new, not only in the changes in the law, but also what's new with them, and align with their changes to the new law. So we're always fine tuning. You might say we're always refurbishing or polishing that classic car. So the conclusion would be you need to do good planning. You need to have some thoughtful planning. You need a road, a path, which we help clients with instructions of what they do. And normally how we do it is our system is basically a 2-minute survey that answers really poignant questions that point us in the direction of where you are. We put a report together. We put it in video. It's usually about 18 minutes long. Tells you where you are, where some deficits are, what are some of the paths you could take. Depending on the path you take, we put together a discovery. This actually narrows down and drills deep into these areas where we can actually define where you are, where you should be, and the 2 or 3 ways of getting there that fit what you're trying to do. Once we do that, now we have an actual template that says to the advising team, these are the things we need to do, and each person in the team takes over and does it. So I want to thank you for taking the time, and also let you know that I had a book published about 4 years ago, 5 years ago now, Unlocking Your Business DNA. It's a very good book. I've took my 50-something years of experience working with business owners and put it in a book. Very easy read, but you'll get a lot out of it. It really was designed for business owners and for advisors to utilize some of these strategies that are very, very prevalent today and being used. So I want to thank you very much for taking the time to come and spend your time with me. Thank you very much. Well, there you go. A lot of information in there and how to plan, how to make sure you're using some of these strategies, how to make sure the distribution of your estate is done. Again, what you got out of it was basically long-term care. The cost of long-term care is an issue for a lot of people, in this area with wealth, because they will not get any Medicaid aid, and they'll be paying out of their pocket. So I have put an emphasis on that discussion with many people. So if you have any questions, again, send me the email at tperrone@necgginc.com, or you could even call me at 203-530-6615. Thanks for attending this webinar. I appreciate it.